In this video, we're going to go over the US indices, SPY, QQQ, IWM, and finally we're going to update with some Bitcoin, gold, and some swing trades and longer term trades. Let's start things off with the major news events this week. So the Fed Chair Powell had his announcement this week at the Jackson Hole event in Wyoming. And essentially he was saying that interest rates have been pretty high lately, about 5.5%. And he's saying that the time has come for the policy to adjust to start lowering interest rates. So essentially this is saying that a couple of years ago he was saying that he thought inflation was transitory. So a lot of people were saying we don't think it's transitory based on what the central bank has been doing over the past 10 years, which is just printing money. Inflation was going to come back to bite everyone at some point, and everyone saw this coming. Everyone except the Fed. So they had to raise interest rates to try and cool inflation. So let's carry on reading on. So ultimately his speech struck a more hopeful tone than in the past few years when the Fed was in the thick of its inflation fight, but he made clear that the two-pronged battle to control prices without sparking widespread layoffs was not over. So we will do everything we can to support a strong labour market as we make further progress towards price stability. Powell said, with appropriate dialing back of policy restraint, there is a good reason to think that the economy will get back to 2% inflation while maintaining a strong labour market. So this is essentially what the Fed has to do. It has to maintain inflation at 2% whilst maintaining a strong labour market. Now, with inflation being 5%, they've had to raise, the Fed interest rate up to about 5%. Hoping that will, cool the economy down, cool inflation down, and it seems to be working. It's taken longer than they thought, but a lot of traders were essentially quite scared that by raising the interest rates, by trying to cool the economy down, that could have caused a mini recession in itself. So we seem to have avoided all of that, and the Fed are hopeful now that by starting to lower interest rates, it's not going to cause too much of a problem in the wider economy, and the labour market should stay strong. Having said that, usually when interest rates are cut, that's a sign of a recession. So, there's a bit of a mixed bag out there. Some traders are taking this as bad news, some traders taking it as good news. I think the overall consensus is that this is pretty healthy for the market, with a strong labour market and Fed cutting interest rates into the future. That should sort of buoy investments. So how do things look from a charting perspective? So US 500 is up near all-time highs. Since we published our sort of long-term trades to go long on US 500 and NASDAQ, we've pretty much gone sideways since there. The time to really go long was around this 100-day moving average, or closer to this 200-day moving average. But since then, you should just be holding on to those longs, carrying this rally all the way up. At the moment, it's hard to tell where we're going to go from here. Being so close to all-time highs, we could poke ahead above the all-time highs, up into this previous uptrend line that was broken a while ago. But with the Fed announcement out of the way, there's nothing to say that we can't break these highs and stay above these highs. Looking at a smaller time frame, the US 500 is above its weekly moving average, hitting resistance here, and again the all-time high is not too far away. RSI getting close to overbought with PPO with bullish separation. So nothing to suggest that we're going to turn down in the next few days or so, but this isn't the place where I'd particularly want to be go long. You want to be going long when we're oversold and the index is cheap. So at the moment I don't think there's any signal to say to exit any longs that you took around here, but also nothing I wouldn't be trying to short the market at the moment. Right, so moving on to the NASDAQ. NASDAQ's not quite as high as the US 500. We had a deeper retracement coming all the way back to the 200-day moving average. So again, just going sideways for the last couple of days. Looking the same on QQQ, just a bit of consolidation in time more so than in price. Still got bullish separation on the PPO. RSI is in overbought territory, so we've still got a way to move up. I think one of the things that could happen is the Nasdaq could catch up with the US 500. US 500 could take out the all-time highs, and that could push quite a bit higher while the Nasdaq comes up to test its all-time highs. We could get more of a pullback down to this 18,900 level. That would be a nice place to go long. Looking onto a smaller time frame, that's quite a nice support level around here. If we come any lower than the 18,900, I'd be hesitant of adding to any longs. I'd be waiting to see what the daily charts look like, to see if we close down here. An intraday bounce off of this level would be a nice place to go long, but closing down here on a daily chart wouldn't be particularly good. So we're testing the weekly moving average. RSI is around 50. PPOs, just come back to the flat line, but with bullish separation. So it's hard to gauge where we're going to go from here. It's just as likely we come down to this 18,900 level as we start pushing up to all-time highs. So it's not particularly good risk reward at the moment. Again, the time to go long was around here, testing these lows. So if you were long around here, I'll just be holding. You should be able to hold for any retracement down to here, with the target being all-time highs in the Nasdaq. Okay, moving on to the small caps. So small caps had a pretty bullish week. Friday was really strong bullish action. So that's taking us back up to this sort of this range that we had a couple of weeks ago. Really, I would want to see them take out these highs. We're still lagging the broad market and the tech sector and the Nasdaq. There was more of a rally this year in those sectors, with the small caps lagging behind. So they still got a way to catch up. I think if you were long when this daily chart was testing the 200-day moving average, I would still be holding on to here. I think we can get back to all-time highs. If you haven't got a position, I don't know, a short might be better up around here, this 2,300 level. If we look on an hourly time frame, that might be a nice short, depending on how we get there. We're quite overbought at the moment on the RSI. PPO's got bullish separation, so I could see us not having much of a retracement here, price continuing on up. If we get to this 2,500 to 250, to 2,300, that might be a nice place to look for a short, for a small pullback. It could just be like a daily short, a couple of hours, if we get some divergence on the RSI and PPO. But from a longer term standpoint, I don't think there's much to do with small caps. We should have been long, back testing these moving averages and then just holding on to those longs, taking profit around the all-time highs. On to Bitcoin. So Bitcoin's had a bit of a consolidation year. Going back to the start of the year, we had a bit of a bullish run up until March, and then since then we've just been consolidating in price for the last 6 months or so. So whilst the broad market had that sell-off, Bitcoin dropped under its 100 and 200-day moving averages, and then since then it's not actually regained either of those moving averages. Recently we've come up and tested this resistance around 65,000, and we haven't been able to get over that. Now that's a confluence of resistance around the 100-day, 200-day moving averages, and this resistance on the chart. So I would be waiting to see if Bitcoin can break above this resistance and stay above here for a few days to confirm that the bullish uptrend's still intact. I think I'd be more wary looking at how these moving averages are starting to cross over. I think it's more probable that Bitcoin's probably going to spend the next few weeks to few months below this 65,000 level. Possibly, I think there's quite a good chance of us getting down to 50,000. All the way down to 40,000. So we have a bullish outlook on Bitcoin, but I think I'd be more inclined to be waiting for a pullback down to 50,000 or 40,000 to take any new longs in Bitcoin. Moving on to gold. So gold's had a really strong run since the start of the year. It sort of broke out of this trading range in March, and then it's been pretty bullish ever since then. We had a small falling wedge back here in April, May. But we were expecting more of a stronger move out of here, but it's just been just strong uptrend, sort of slow strong uptrend the last few months. So nothing to suggest that we're going to get a pullback. This is just sort of a grind higher in gold. One thing I would be cautious of is if inflationary pressures are starting to ease. That's not particularly good for the precious metal market. Having said that, inflation is still pretty high at the moment, so that shouldn't affect gold too much. It's just something to be wary of. We haven't got any RSI divergence or PPO divergence, and we've still got some room to go on the RSI and PPO. We could stay in overbought territory for quite some time. So again, the time to go long was probably around here, around this 2,300 level, ideally around to 2,100. I mean, if you can get an entry back to here, any pullbacks down to 2,300, that would just be a normal pullback on a daily chart. I don't think we're going to get that anytime soon, so I wouldn't be going long here. You could take a long with a stop around this 2,500, maybe pulling all the way back down to here, but this would just be a healthy retracement back down to 2,150. So I don't think there's too many reasons to be going long at the moment. If you are long, it's just hold on to those longs for the grind higher and wait till we get some RSI divergence or more of a signal to sell any gold. Okay, so we're going to update a couple of swing trades now. So we had Warner Brothers we took an entry in Warner Brothers this week. So since our entry, we had a bit of a consolidation, and then prices broken above this 790 level, which also coincides with this 100-day moving average. So that's pretty good news. We've got PPO separation over here, and had this nice divergence, which caused us to go long. So as price was coming down, making lower lows, our indicators were making higher lows, RSI making higher low, and PPO making a higher low, which is a signal that the sellers are drying up, buyers are starting to step in, and everything's suggesting that's looking good at the moment. So the next resistance we've got up here is around 840 and 890. I think at this point, if we're getting up to 890, we should be raising stops at least to above entry, taking some profit here. Around 9:30, if you can get up to 11:30, that would definitely be my final target on Warner Brothers. There's not the sort of company that I want to hold long term, but for a short trade up to this sort of around $9 to 11:30 should be a nice trade. Onto UPS. So UPS has just been consolidating the last few days. Nothing much to note of here. The only thing I will say about UPS is to be wary. If we start breaking below the lows around this 120 level, that's not going to be looking good for UPS. Again, it's not the sort of thing I want to be in long term. I'm looking for a run up to this 134.40 level where we had this previous support. So once support, now resistance, so we need to break above this 134 level. If we can get up to here, our final target's probably going to be this gap around 145, maybe up to 155, but that's going to be trader's choice. But I think at the moment that's a nice risk reward, but I wouldn't be holding UPS if we start breaking below. I mean, we're in a solid downtrend. We do have divergence on the RSI but not on the PPO, so we'll see how UPS goes over the next few weeks. ALB is doing quite well. Nice divergence on ALB on RSI and PPO. Last couple of days, price action has been pretty bullish, up 5% last few days, or last day. So now we've got to take out this gap over here around 92.90, 92.80 level. If we can get past that, there's some more resistance around this $100 level, and that's where I'd be taking some profit here. Final profit target's probably around 115 to 120. Again, nothing to. This is the sort of thing, if we break above this downtrend line, you might have caught the low. It might be, we can reassess how the charts look when we get up here, but ALB is looking good at the moment. We need to take out this gap and then move up to the $100 level, where we can start taking some profit and at the very least raise stops. Moving on to NUE. So NUE is doing okay, nice divergence. Another one to be cautious of, like UPS, we've just had the 100-day cross below the 200-day moving average. We are in the start of a new downtrend. this is the sort of one that I like for other reasons other than just the charting perspective. So we could get a bit of a run up here up into this 200-day moving average around this 170 level, but this isn't the sort of thing that I want to hold below 140. SEDG is the next one. So a bit of a nice bullish day on Friday, up around 15% on Friday. A bit of a messy chart looking on the daily chart. So if we have a look at the hourly chart, just strong bullish action, but we still got quite a way to go. We want to make it up to this 32 level, break above this 32, and then we've got this gap up here around 37. So I think these are nice profit targets up here. If our entry was somewhere around here. So yeah, not one that I would be wanting to hold below previous lows, but this is pretty steep divergence. So we could get a strong rally up here if we start breaking above this downtrend line. I think there's a good chance we could test the 200-day moving average all the way up here at $60, which would be about just double the price of where we are now. So nice potential for a trade in SEDG. Pfizer, from a long-term perspective, nothing much has happened over the next few days. We're not expecting much to happen with Pfizer, but as long as we stay above these moving averages, which is starting to curl up, PPO is starting to curl over into bullish territory. RSI's got room to move up. Pfizer's looking good from a long-term perspective. Intel, we could see more of a retracement here. Anything down to 1750 would be pretty normal for Intel following this big drop. But from a longer term perspective, there's nothing too concerning about what's happened over the last few days of Intel. And finally, we've just got MJ consolidating sideways. Again, from a longer term perspective, nothing particularly interesting happening here. You should be happy to hold pullbacks all the way down to 250. It's not going to change much from a daily perspective. Hopefully we can start to get some room breaking above this $4 level over the next few weeks.